Welcome to Trading Lounge and the Commodities Report. Just before we start, though, on our not our AI here, but our Elliott wave algo here, we've put in a new Zhao has put in a new function here. So if you've got, say, 5 waves here, and you click on here, we've put this little little icon in here. So what that will do here is that will basically add the wave 1 to here. Okay, so if I just click on this here, it'll put the wave 1 here. It was looking for the pullback here, so we can just push this over to here, and these, even though this is a bit out of whack over here, it'll still have basically the projections for that particular third wave. So it's just giving you a little bit more manual control over what you're doing at this point. Okay, so I'll leave that at that, but you can get to know that function. Okay, so over to Bitcoin, and with Bitcoin here we've got this is a daily chart for Bitcoin, and we've got wave 3 here with an A and a B and 1 and 2 and 3 and 4 and 5. Now different people will have this counted differently, and Kittypon has got it as a WXY, and he also called the low in on this, so congrats on him for doing that as well. Now it does appear we don't have 5 waves up here at this stage, but it certainly looks like the beginnings of an impulse wave to the upside. So I want to investigate this on Bitcoin and also Ethereum, and also the crypto index as well. The crypto index that I follow is the top 10, so picking it up from that previous wave 4 here, this is the sort of the nutshell of it. I could view it as a little, I've got it as this wave 1 here and 2 here, right, in blue, and then going all the way up here for this blue, 3, 4 and 5 up here for 1 and 2 here. I think that's the right thing. If I've made a mistake, because this is an intermediate wave 4 here, and this is minor wave 1 and 2, so that would fit that way, I could possibly shorten the whole thing and look at this as minor wave 1 here, but I don't think that's the case. So in a bit of a nutshell here, this is the 5-wave structure. So between wave 2 here and wave 3 here, we're also looking for 5 waves up here of 1 and 2, and then 3, 4 and 5 up here to make wave 3 at that point. So that will be the whole third wave coming into play at this point. And then here will be 1 and 2 and 3 and 4 and 5 for 1, and from here it'll be, you could count this a little bit differently as well if I extended 1 and 2 and 3, 4, 5. So that technically works. I can see that there is another way to do that, but the main point here is that it does appear that we've got our impulse wave to the upside as 1 and 2 to the upside. So if we take the same approach with Bitcoin here and looking at the low of wave 4 being in place, we can look at minute 1, minute 2, 3, 4, 5 up here for 1 and 2 here. Don't pay any attention to how far I've got it extended out here or how high I've got it up here, because we'll just need to count the waves. So this move up here could be lower than where I've got it at the moment. We should be looking at a classic trading levels pattern across that 65,000. The 65,000 is a medium level, so we'll see the arrival, the reaction, the first high above the level, and ABC, and so on. So yeah, that's where we are at the moment for this, but is looking quite good. And you know, when you consider this here, if we consider all of this as wave 1 here and 2 here, well then we could probably look at wave 3 being up here much higher up here for this. So we could just, if I just copy this here, I'll just put wave 3 up here for the time being, because wave 3 would need to be longer than wave 1 here, or the length of wave 1 here. So we could be on our way to the 100,000 here. And while we're here, we'll have a look at Ethereum as well. So with Ether here, wave 4 with 1 and 2 in the same boat, 1 and 2 and 3 and 4 and 5 going up for the third wave, the fourth wave and the fifth wave. I got it up to the medium level here, 4, but you know, do understand that, you know, this is such a good accumulation process through here, so from here all the way to here. So you could normally take the distance of this here and stand it on its head up this way. That would be squaring time and price. You know, Richard Wyckoff's work again, more so than Gann's, but yeah, so you know we'll be looking for further upside, and this will be the same pattern for Solana as well, and you know anything that's in this particular thing here. I think I haven't looked at XRP, but I think that could be in the same sort of vein as well with that. So looking quite good, you know. I mean, let's see how we go. You know, once if I could confirm between 3 and 4 here, right, if this is a corrective pattern in here in 3 waves or some other type of corrective pattern here, then I could tell you, because it's corrective, that means it will get wave 5 here. And because we get wave 5, we'll be able to label that wave 1 and that as wave 2. So this 5 waves here will produce another 5 waves over here, because it's the first 5 waves in the opposite direction of the trend over here. So yeah, pretty exciting stuff all in all. Okay, so what we want to do now is we want to go over to, so that's the crypto thing there, and also to Sandy has also started to in the Trading Lounge social chat under the crypto tab, he started to do a lot of work in that space as well. So we've got 2 people working the crypto space now. So a lot of intraday updates to come for that. Okay, so I want to go over to the dollar bonds and yield. And I'll just come back to this one in a moment. If I just start with the yield, the bonds here, and with the bonds, as you know, we're looking at daily chart. We're looking at wave A here with an A, B, C for the B wave, and this is a corrective pattern here, so we should be taking out the top here. And then we've been working this up here as an impulse wave and looking back for wave 2 here. So we're going up for 3, 4, 5 up here. And as we open this up here further, then we've been looking at, I'll need to have a look at the intraday. I'm not going to go into the intraday at the moment, but I can see the volume here is pushing it up higher. So we'll be, and the main point here is this move from 1 to 2 here back into the 61.8% is corrective. So we'll be taking that high out here. And yeah, I think that's, yeah, I don't see anything. It's pretty much the only way to count this particular structure, but it's bullish. So while we're seeing the bonds push up, we're going to be seeing the yields push down here, and this will be the inversion of that structure. So we're looking at 1, 2, 3, 4, 5 for 1 and 2, the opposite of the bonds. This will be the same as the dollar, and coming down for wave 1 here, and looking for a wave 2 to pull back. How far it pulls back, sure, we can go the 50%, 61.8% and all those sort of things, but we should see some type of little correction come back. As it's sitting, also just sort of note that it's sitting at the 61.8% retracement level from the previous low to high here. So it will get a bit messy in here, but eventually it should move on down. But we should see a rally come in first before seeing it move on down. So if the bonds are going up and the yields are going down, then we can expect the dollar to be moving down as well. But I wanted to just talk about this. I'll just remove my Kandinsky drawings, and so we're basically looking at this here with wave 1 and 2 here and 1 and 2 here, and then down for 1 here and back for 2. So it's kind of like the yields here. I did have my other little chart here that I'll just see where that is at the moment. Just bear with me for a second or two if I can find it without too much ado. Yeah, here it is. So this wave 1 coming down to here and going back to wave 2 is what we're really looking for at the moment. So we're counting down here as 1, 2, 3, 4, 5 here. So we can pick it up from this wave 2 here, and I'll just go onto the intraday here a little bit. So from this wave 2 up here, we're looking at 1 and 2 and 3 and 4 and 1, 2, 3, 4, 5. Now, I just wanted to talk about this a little bit here. The reason I wanted to do this for is because we've had this little spike thing here, but it's not really in the flow of the traffic. You know what I mean? We've got 1, 2, 3, 4, 5 here. So I'm a bit more likely to put it over here. Technically, sure, it could go here. And I could look at this as the A wave here and the B wave here and the C wave here, but we should be pulling up a little bit higher here, and we haven't even seen the yields move up. So I'm thinking that we still need to push up, but I'm sort of thinking like forgetting about the spike and just following the main traffic here and calling this low in rather than this one. It may not even be on your platform, but yeah, anyway, we're sort of looking for a rally here. We've got this trend line coming through here, so there's a bit of a headache at that point, resistance there. And so anyway, we'll just allow that to sort of play out. But once we've got this in play here and we start to move down here, then we can look to be long. We can work the Aussie and the cable and the euro dollar and so on at that point. So we'll wait for this to move to do its business, and then we'll start looking for FX short trades in the market. Okay, and yeah, the other thing that I wanted to mention, these red lines here, sorry about those. It's still a bit possible to have that as a bit of a triangle pattern. So this is a bit clearer here. So from here is an A, B, C, D, and E here. So to make the B wave here and then go down for the C wave here. Now, the reason that I think that this could be a possibility, because the other pathway, we would see this market fall out of bed and drop lower, basically, but this particular way here would basically keep it traveling sideways but still moving up and down, right? And the reason I think this is worth noting, at least, is because of the Deutsche Bank dollar index bullish fund here, because as I mentioned before, this particular pattern, all of this pattern here is really the same as the Dixie, right? Except this one here has been pushing up. All of these structures have been pushing up, but all the tops and bottoms and lows and everything are the same, the same pattern, except that we made a low down here on this, but all the bottoms and tops are same. But in this case, we've got the market it's taken the top out up here, right? So in this instance here, I was looking at this being from 4 here, 1 and 2, and then going 1 and 2 in here, and 3 and 4 in here, and then going up for 5 to make 3. So I've been looking at it pulling back here. Now, I haven't gone in here and viewed this as such, and it may get a bit more complicated in here, and it can come lower here and do a few things in here, but once it's finished here, it could push up here and then come back and then push up again, because it's just simply not finished to the upside. So then I think to myself, well, if this can do this, that means that the Dixie can, going back to that triangle space there, have another couple of moves up. Now, it's not as strong as the Deutsche Bank index thing, but it can still kind of play out in some sort of way here, in some sort of thing here when this comes. So it's got a couple more highs to make before it comes down here and then moves up. So this move here would be, this big move here would be this move here coming into wave 2. So we've got 2 more new highs to make here. So bringing those 2 over into here and having these as some sort of, we're looking at the yields and the bonds. It's telling us that we should come down, and yes, we will come down, but just not as quick as we may think that it will come down. And this could be a trap for young players when it comes into being long in the opposite pairs. Anyway, just a little bit of food for thought, and we'll see how that goes. And maybe we could make another high here. Maybe it's sort of also to the possibility of being 1 and 2 and 3 and an A, B, C for 4 here, and even though it's overlapped here, and then go up for 5 here to make the C wave here, you know, to make this C of B over here. So an A and a B and a C wave here. Do you know what I mean? So it just could get it's not as easy as we think that it could be at this point. I'll leave that there so I remember what I've said, so I can sort of build on that or not build on it and ditch it. So anyway, we'll see how it travels, and we'll look for the short trades and long trades in the other pairs. Okay, so that's in a nutshell. That's the dollar bonds and yields at that point. And now we can go and have a look at the gold stock. So normally we've been looking at GDX as one of the markets here. So this might need to be changed here. So let me first of all, I'll probably move that and bring this over to here and bring this here. I'm going to bring this over to here, this to here. I'm just going to shorten this up a little bit here, 3, 4, and I'll just remove this here. I'll have a look at this in a bit of detail here. I mean, the US spot gold's going to be kind of same in a way, you know. I could look at this being wave 1 and 2 up here as well, but I know that the 40 here is a medium level, and we will get this pattern here. So we'll get the arrival, the reaction, the first high above the level, yada, yada, yada. And, you know, so we really need to be taking some money off the table here. Maybe not all of it. We can get up into this point here maybe and wait for this and get back in over here and get a couple of positions early in over here and then build over here for that. So in a nutshell, just to make that a bit clearer, just going to this chart here, we've got this wave 4 here. Looking at this is 1 and 2 here. And then we'll look at this as this move here. So we'll look at this as 2 going up to 3 here and to 4 here and to 5 here. I need to tighten all that up. Don't worry about the dates where it's way out in front here. We could easily tighten this up a lot here. So we could put that in. It's kind of getting there. This one here is a little 1, 2, 1, 2, 3, 4, 5, a little bit more to go. 4 and 5 here for this one here, this one here, and so that tightens it up a lot, because this wave 1 was not very big, because the extensions between 2 and 3 here, that means wave 1 and wave 5 could be roughly the same, you know, so we'll need to tighten all that up. So yes, but wave 2 here going up to wave 3 here as 1 and 2 and 3, 4, 5, and between 2 and 3 here we can look at this as 1, 2, 3, 4, 5 for 1 and 2, and 1, 2, 3, 4, then 1, 2, 3, 4, 5 for third, fourth, and then 1 and 2 and 1 and 2. You can figure that out. Yeah, so that's basically GDX, and we've got a few positions in that, but we also need to look at US spot gold. So I'm just going to go to my other chart to look at that. So over here, it'll be much the same. I should check Sami's count for this as well. But basically in here is 1 and 2, the same as GDX, going up for wave 3, 4, and 5 here for this. And once again, I can tighten all of this. I'll need to tighten all of this up here as well. That while GDX is at the $40, which is a medium level, this one here is at 2,500. This will also be a medium level, and you can see how small wave 1 is here. So yeah, I mean, we're lucky we got some positions down here for this. So I kind of like to, you know, hold some of those. We can certainly take some money off the table at the 2.5 or a bit higher or whatever. I just want to kind of see where the dollar is and just see where, you know, where the other markets are and those sort of things. So just don't want to get out. I mean, if it was at 3,000, I would be sort of looking to, you know, refine things a bit further, but I just think we should stay in. But yeah, anyway, 1 and 2 and 1 and 2 here. and then I've got this as 1 and 2 and 3 and 4, and I've got the extension in the wave 5 here in this case. Now I may need to change that, but the good thing about this one here is it folds in with GDX as well, but I could still push it even higher. But the same thing applies here. We'll be looking at this market, at this pattern here, or it may not drop below here, but highly likely that it will, rather than getting this particular pattern here. And the final pattern is where it doesn't stop at the level here and goes up, but will fold back. But in one way or another, we should expect some sort, one of these three corrections at the level. And yeah, so that's where we are really. So nothing to do here, and then we can have a look at silver. Silver's a little bit different, and I want to talk about this a little bit. So I mean, we had this here, this particular at the $31 mark. This here was a 50-60% retracement level from the previous high over here. So we understood that there was going to be resistance there, and when we can see that as support, that's going to be a positive. And we also understood this previous high here and all these bottoms here would give us support over here. So it was a bit of a ping pong game between these two things here in that sense, right? Now in terms of the Elliott wave count here, I've got this up here as wave 1 here. And I could have this here as the A wave, the B wave in here, and the C wave here, and put wave 2 here. And I'm happy with that, but then I wasn't really that happy with looking at this situation here for this, all of this here doesn't really give me impulse vibes, let's say. Here we're going quite nice here, and we could look at this as 1 and 2 and 3 and a little 4 in here and a 5 up here. So once that wave 5 up here finishes, then we could go long above that. But at the same time, this sort of reminds me of a B wave here, as an A and a B and a C wave for the B wave, and then down for the C wave here. So we just need to be a little bit careful. There's the possibility of looking at it as a wave 4 as well, which is an A and a B and a C and a D and an E wave over here. So a triangle pattern for wave 4, and then we go up for wave 5. It's a bit of a long shot, but it's workable. The thing is that what I can say is that the market is still bullish, and we will make new highs. But the question is, what do we have in this particular space here at the moment? So I think I'll just sort of chill on this, and we'll leave the stop out of the way, and just allow it to do its thing. We don't get caught up in any of this at this point. There's too many options in here. Not that many options, but yeah. Just sort of double checking a few things. It's okay. So yeah, we'll just leave it. So it could just go straight up from here. That would be good. And we could even look for a long trade above here, but I'll look at that tomorrow, because even if there is, let's just assume that there is 5 waves going up here, then it's going to have an ABC back again, isn't it? So that's where we'll pick it up. So we'll just check on that tomorrow. Okay, so I'm going to have a look at the base metals, but I'm just going to use Samney's charts for that. So let me go into commodity charts. So we'll have a look at a few things. So the first thing I want to have a look at is copper. I think that's 15th, that's 16th. Yeah, anyway, we still got to push up for that. That's okay. I just want to have a look at also want to have a look at uranium. My count's slightly different. My count for uranium compared to Samney's here is this top here. is that I have this as a wave one, and I'm looking for an A wave, a B wave, and a C wave here, and then pushing up again, where he's got an ABC here as well. I don't know if he's going to push up from that point. So where he's got wave C up here, I've got that as a larger wave one at that point. So anyway, it's okay for the time being. And I just want to have a look at iron ore for a moment. So this will be good. We'll see BHP push up for this, but be a little bit careful about FMG and BHP and those ones at this point pushing up for and Rio and so on. Okay, and I don't need to have a look at any soft commodities, but I do want to have a look at natural gas. And yeah, we've been looking for this low of wave 4 here. I can count this down a little bit differently, but I'm still looking for a low in this space here for natural gas. So if I see an impulse wave to the upside coming from this, then we'll tune in and we'll look for the trade setup in this video, but otherwise we won't. And also want to have a look at crude oil at this point as well. Now let's just go over to here. So somebody's got this coming down here, and this is probably right, but it might get a little bit complicated because this should be really the same as the US dollar coming down. So this is the US dollar here on a daily chart here. So we've just had a look at the dollar. So we've got wave 1 and 2 and 1 and 2 and 1 and 2 coming down for wave 3 here. Now, as I mentioned before with the dollar, we've got we could possibly have a triangle pattern playing out as well. So we just need to be a little bit careful for that. But because the dollar is coming down, we should expect the crude oil to come down as well. While the bonds go up and the yields come down, the dollar comes down, crude will come down, and so on. So we'll look for a short trade in here. You could probably just short this new low here, but because it's at the $80 mark here, let me just go and get my chart on this, because we're not, you could go short at the moment. But so we've got this move down here, then we've got this corrective pattern pulling back to that 50-60%, and then I can see here I'm on 20,000 ticks, which is quite big. So I can see that we've got wave 1 here and 2 here, and this will be the third. This will still be the third. I'll just draw this out a little bit here, and we're not ready to move on this. This will be wave 1 and 2, and there'll be 1, 2, 3, 4. So there'll be all of that will be wave 3. There'll be wave 4, then there'll be wave 5 here. We have talked about this before, and then they could actually come down a bit lower actually, and then come down. So we're looking for the retest of this. So normally we would look at this in terms of a bearish pattern. So this would be at the $80 point, this would be a very simple entry. Once we get the low in place and get the retest there, we can short it. Normally this would come back above the level slightly here, so we could also look at not that one, not that one, this one. No, don't have it. I thought this one. So yeah, so it just comes back up. If this is the $80 mark here, and come back above the level, but we'll work this reference point low here, which we don't have yet. And we want that to be 5 waves, not 3 waves down. So once we've got our 5 waves down, we'll work that low there at that point. Alrighty, so that's that really. So we've just sort of basically covered it, and I'll leave it at that. Thanks for tuning in. Cheers.